Good afternoon and a warm welcome to all the participants. On the call today, I am joined by my colleagues Mr. Sanjay Jain, Qtr4, Rana, and my colleagues in SGA, our higher consultants. I hope you have had a look at our financial results and presentation that has been uploaded on stock exchange site as well as company website. I will speak briefly on the industry and then give an update on our performance, following which we will be happy to answer your queries. About the auto sector, India's auto industry has a potential to generate about 300 billion turnover by 2026, creating 65 million additional jobs and contributing over 12% to India's GDP. The sector is expected to remain in the robust growth horizon over the next 5 years, with volume growth in the region of 6 to 8% every year. On the onset of the new financial year 18-19, automobile sales have shown robust high double-digit growth in the month of April 18 over last year. Growth can be largely seen as the low base effect of the previous year's same month, especially in the two-wheeler and commercial vehicle segments due to the implementation of BS4 compliant vehicles. Sector has grown by 15% year-on-year, with all segments contributing positively to this growth. Industry is expected to witness continued strong growth on factors like forecast of good monsoon, implementation of BS4, and with effect of GST behind us. However, some adverse factors like rising fuel prices and rupee depreciation may pose a threat to the growth to some extent. We are reasonably confident that our company will continue to outperform the industry growth as we will continue to focus on increasing our kit value with all OEMs and increase our product range with the help of innovation and R&D. Now coming to Minda Industries performance. At the outset, we are pleased to inform that board has recommended issue of bonus shares to the shareholders of the company in the ratio of 2 bonus shares for every 1 existing equity share held by shareholders as on the record date to be fixed separately, subject to the shareholders and other regulatory approvals. The approval of the shareholders is being sought shortly. We are very pleased to inform that Board of Directors have recommended final dividend of 80% of face value pre-bonus on the face value of rupees 2 per share. Thus, total dividend for the year would be 140% of rupees 2, which is the face value, including interim dividend of 60% already distributed. At a consolidated level, during financial year 18, company has registered a revenue of rupees 4,470 crores, which gives us a growth of over 32% over preceding year of revenue, which is rupees 3,386 crores. EBITDA during the period was rupees 534 crores, a growth of 43% year-on-year from rupees 374 crores in financial year 16-17. EBITDA margin was 12% in the year under reference as compared to 11% of 16-17. PBT before exceptional item in the current year under reference was at rupees 367 crores, a growth of 73% year-on-year from 212 crores in the preceding year. PAT attributable to MIL grew by 88% from 165 crores in 16-17 to 310 crores in 17-18. Normalized PAT, our share for the year is 256 crores. During Q4 of 17-18, at a consolidated level, company registered a revenue of rupees 1371 crores, giving a growth of 53% year-on-year from 897 crores of Q4 of 16-17. This was primarily driven by improvement in the performance of Minda, Minda Kose, Minda MG Castings and Render India. On a standalone basis, revenue grew 26% year-on-year, which was largely driven by two-wheeler switch and lighting business. EBITDA was at rupees 170 crores, a growth by 62% year-on-year from 105 crores in Q4 of the last year. EBITDA margin was 12.4% in Q4 of 17-18 as compared to 11.7% in Q4 of 16-17. These margins have been achieved on the back of a lower RMC on a consolidated basis and higher capacity utilization in new businesses like Minda Kose, Rocky Minda, etc. We believe these margin levels are sustainable and we are focused on managing our costs. PBT before exceptional item for the quarter 4 of 17 and 18 was at rupees 119 crores, a growth of 85% year-on-year from of preceding quarter of Q1 of the preceding year. PAT attributable to MIL grew by 141% from 56 crores in Q4 of 16-17 to 135 crores in Q4 of 17-18. The normalized PAT, which is before exceptional item, is 82 crores for this quarter. Now coming to the product specifics. Switching system. This segment achieved a revenue of 1,580 crores for 17-18, contributing about 35% of the total consolidated turnover of the MIL. EBITDA margin in this segment was around 12% during this year. Now coming to lighting systems, lighting division achieved a revenue of 1,164 crores in 17-18, contributing 25% to our total turnover. EBITDA margin in this segment was around 9.9% this year. Next, acoustic division or horns. Acoustic division achieved a revenue of 717 crores in 17-18, contributing 16% to our total turnover. EBITDA margin in this segment was around 8%. Other product lines have also started contributing and showing good traction. As a whole, we achieved a revenue of rupees 1,100 crores in 17-18 from other products, including filters, including alloy wheels, die-cast aluminum die casting, etc. Several products amongst these consistently achieving higher margins. On a consolidated level, we have been able to achieve an EBITDA margin of 15.8% from these other categories. Business update. Plants of Minda Kose, which is into alloy wheels, and Minda Rika, which is into switches for four wheels, has started production in Gujarat last week. Investment done in the same is rupees 60 crores in case of alloy wheels and 200 crores in case of switches. 200 crores in case of Kose alloy wheels and 59 crores in case of Minda Rika. Minda Onkyo plant in Haryana for speakers has started production in September 2017, in which the investment of about 50 crores has been made. Minda TTE DEFS plant in Haryana for reverse parking systems is expected to start production by the end of current financial year, which is 18-19, in which investment of about 35-40 crore is being made. Minda Industries Limited is in the process of acquiring additional stake, about 42%, in Qtr4 Minda Private Limited. With this acquisition, we would be having about 28% stake in TG Minda. 48%. TG Minda is a joint venture company with Qtr4 Japan. It is expected that the transaction will be completed by June end. During the year, MRPL, which is Minda Rika into four-wheeler switches, has become subsidiary of Minda Industries Limited with effect from January 1, 2018. Tenso 10 Minda, in which group held 49%, and Minda D10, in which group held 51%, has been consolidated with MIL with effect from January 1, 18 as a JV company. The company will be hiving off its two-wheeler lighting business located at Sonipat to Render India Private Limited, 100% subsidiary of Minda Industries Limited at a book value. The purpose and the idea behind is that Render India, which we acquired about 2 years ago, is mainly into two-wheeler lighting. So our existing plant of two-wheeler lighting, which is part of MIL, would be transferred to Render India, and all of our two-wheeler, three-wheeler lighting business would be consolidated in Render India. This is all from our side, and now we open the floor for Q&A.
Thank you. Ladies and gentlemen, we will now begin with the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hello sir. Congrats on excellent set of numbers. Firstly, sir, on the MJ casting, I think we have seen very strong, almost 33-34% kind of sales growth this year. So what has driven that kind of growth, and how do you see the business going ahead?
Predominantly, the growth has been backed by higher prices of aluminium on the London Metal Exchange, and that has correspondingly led to a higher increase. Otherwise, in like-to-like terms, tonnage, the capacity remains where it was last year with a better utilization. And we are also serving customers like WAPCO, where our share of business is increasing.
But we have not seen 34% increase in the aluminium prices. I think must be driven by volumes.
So there is an increase in volume, plus there is but in last quarter. The increased amount of sales to WAPCO, which you will see as a higher percentage reflecting in our slides in terms of customer mix. So WAPCO is a highly engineered aluminium casting that we sell. The volume? Yeah. Volume capacity utilization also would have gone up by another 5 percentage points. But largely it is driven by the movement in metal exchange prices.
So as compared to Q3, around 63 crore sale was there, and in Q4 it is 75 crore.
Okay, so I think...
So Ashutosh, it is a combination of both volume increase as well as, of course, aluminium price increase. So there is a better capacity utilization also in this quarter. And of course, our sales to WAPCO has increased.
It was below 10% in last year. Now we have moved up to almost 16%.
You have a margin?
Yeah, high margin business.
And secondly, the standalone margins are pretty good at 11.5% and the full year is 10.3% for in standalone. So how do you see this margin going ahead in FY19 and 20?
As far as ML standalone is concerned, I think we would maintain these kind of margins in times to come. We don't see substantial improvement in these margins. As I have been sharing earlier also, that as of now, Minda Industries have got products which are matured. So volume-wise also and market-wise also, they have already matured products. And of course, we are upgrading the technologies, etc., into these products. Some scope is there for improving margins in lighting. And hopefully, we can see that if not in 18-19, but from 19-20, margins in lighting should improve. But to be on a safer side, presume that similar margins as of 17-18 will remain in next 1 year or so as far as ML standalone is concerned. Additional margins will come mainly from new components and new joint ventures which we have entered into in last 3 to 5 years.
Okay, so the standard margin would still be around 10.5%.
10.5% at least in 18-19. Okay. Some improvement expected from 19-20. As I said, from lighting and others.
Okay. And so alloy wheel plant is commissioned now. So how do you see the ramp up? Like I think we did roughly 435 crore sales in FY18. So how would that number look like say FY19 in Minda Kosei?
Around 650 crores for the full year.
Okay, and this is primarily driven by Maruti.
Yeah, largest customer continues to be Maruti, but we also sell to Mahindra and Mahindra, and in or Suzuki, Maruti, Gujarat, SMG.
And lastly, Render, how much sales you did in this year? How much growth was there versus last year?
The growth we have captured on the slide number 5, where additional sales from Render for this full year is 40 crores. Around 430 crores is the sales that
last year was 386, now is 426.
386.
Last year.
Yeah. This year is 426.
Okay. And how do you see this going ahead? Because in lighting, we are seeing a shift towards LEDs in two-wheelers basically. And so how do you benefit from that? And can we basically grow this business very well in terms of because of the extra growth coming from shift to LEDs?
So yes, there is a shift which is already happening in the LED. And this is opening up opportunity for us also. Just to recollect, one of the main reasons for acquiring Render was the LED technology available with them. So we are getting attraction and orders for LED lamps, which will add, of course, to the top line also in times to come. And that's why I mentioned also partly because of this and partly because of the productivity improvement which we are trying, that margins in lighting we expect to improve from 1920 onward, not necessarily in 1819.
Okay. And what was the sales number for render in the fourth quarter?
110.
110 crores. Okay.
Yes.
Okay, sir. Thanks a lot.
Thank you. Before we take the next question, I would like to remind all the participants, please limit your question to 2 per participant. You may come back in the question queue if you have a follow-up. Thank you. Next question is from the line of Jai Shriram from Karvi Stock Broking. Please go ahead.
Good afternoon to you, sir, and thank you very much for the opportunity and congratulations on a great set of numbers. With regards to your EBITDA margin expansion that we are seeing because of higher utilization rates, what levels you think these are sustainable in terms of lighting and switches? I mean, more if you could stress on switches also.
No, as far as the consolidated level is concerned, EBITDA margin of 12.4% in Q4, which translates into on an annualized basis about 12% plus. So we are sure that these kind of EBITDA margins are sustainable in the coming years. Rather, we are looking at that on an annualized basis, it should be of the order of 12.5%. Specifically about switches and lamps.
We're already at 12. I think it should be on the same lines as the group average. So we should move closer to 12.5.
Lighting is slightly lower than the group average. I mentioned earlier also answering to Ashutosh's question that there we are specifically looking at and we hope some improvement from 1920 onward.
Okay, so what would be your consolidated utilization rate?
Consolidated for all the plants put together would be of the order of about 80%. Having said that, new capacities has come up in Gujarat only recently, starting with Rocky Minda, now Kose Minda, which is aluminium, and four-wheeler switches Minda Rika. So they are naturally except Rocky Minda, the 2 plants have just started. So that need to be ramped up. So it will take some time.
And EBITDA margin decline in acoustic systems, any reason?
In Klaten, Spain, as well as in Mexico, there's expansion going on, and that's the reason where there are some pre-operating costs that have incurred, and that's why you have overall slightly lower blended EBITDA margin there.
Okay.
The second line is under construction. Hopefully, next year they should, by end of this year, we should have that SOP there.
So you expect this to sustain at 10% levels? Right now it's 8%. So can we consider this to go
around 9%, 9.5% it should move up.
Okay. And last question, regarding the kit size of your components, we see that, the kit sizes, kit value is higher for four-wheelers. And if you also look at your composition, your four-wheeler revenue has substantially grown up. So going forward, is that, in terms of value, how much of it is going to contribute in terms of operating profits?
In terms of sale mix, we will see almost a 50-50 split between two-wheeler and four-wheeler. Four-wheeler will also include the passenger and the commercial vehicle. Because largely the other businesses which we have consolidated this year are focused on four-wheeler business.
Okay.
Excuse me, ma'am. I'm so sorry to interrupt, but requesting you to please join the queue. Thank you. I would like to remind all the participants again, please limit your question to 2 per participant. We take the next question from the line of Arpit Kapoor from IDFC Mutual Fund. Please go ahead.
Thanks a lot, sir. Congratulations for a great set of numbers. Sir, just on the switches part, just wanted, so this quarter I believe we had integrated the numbers of Minda Rika also, and if I do a rough cut calculation, the margin for that part of the business comes around 16%. So would that understanding be correct? And to that extent, for the full year next year also, the four-wheeler switch margins should help you get to the 12.5% margin guidance that you have given?
No, I think Minda business on a full year basis, because the Q4 numbers are higher, it might appear slightly big, but overall on a full year basis, they do almost 13% EBITDA. And we believe on a blended basis, 12.5% should be sustainable.
12.5% will be. Okay. And in terms of the other thing was the TG Minda part. So that JV, since we'll be formed, so there'll be no impact on the sales, but we'll get the proportionate profitability, profit addition in the bottom line.
Yes, you are right. So top line will not increase because that we cannot consolidate. So only proportionate profit will come.
And sir, what kind of opportunity do you see going into 2020 with the regulation coming in? So what kind of an opportunity or revenue potential can that business have?
We see it's a great opportunity. And two key products which are coming is airbags getting compulsory, reverse parking system getting compulsory. So as you are aware, TG Minda is already into airbags. Already we have got two plants. One in Nimrana, one in Bawal, which is already set up, running since last now more than 2-3 years. The third plant is coming up in Gujarat. So by 18-19 end, that is also likely to start. So airbags is one opportunity which is coming out of BS6. Second is, of course, reverse parking system, for which we have already tied up with KT Taiwan, and already we are supplying to Maruti Suzuki and others. So these regulations are throwing up and we are availing these opportunities.
Right. And
excuse me, Mr. Kapoor, may I please request you? Okay, yeah, please go ahead.
I'll come. Yeah, just last bit on bookkeeping one. Sir, what you alluded on the lighting part, the two-wheeler business will go to render. So whatever numbers we report on standalone, to that extent, the numbers would go down given the fact that our two-wheeler lighting business would go to render.
So you are right to that extent. MI standalone numbers will go down, but by the same number, consolidated render will increase. And once we will consolidate render with MIL, on a consolidated level, there will not be any change in any number from the lighting two-wheeler. Overall, it will remain the same. The only objective of doing it is that my all 2-3-wheeler lighting business is under one entity, which is render.
Right. So we should not get scared given the fact that standalone...
No, not at all. On a consolidated level, it will not make any difference. Rather, we feel that there should be some synergies in case everything is under one roof.
Right, sir. All the best, sir, and I'll come back in the queue. Thanks.
Sure.
Thank you. We take the next question from the line of Basudeb Banerjee from Ambit Capital. Please go ahead.
Hello.
Mr. Banerjee, please go ahead with your question.
Yeah, thanks, sir, for taking my question. A couple of questions. One, sir, as you alluded in the call earlier, overall, X of these new businesses getting added, how much of the revenue growth one can largely take from commodity inflation, and how much has been the normalized volume growth?
Now, auto sector has grown last year in case I see 15% year on year. The production of automobiles, whether two-wheeler, three-wheeler, four-wheeler or off-road, on a totality, 15% growth is there in 17-18 vis-a-vis last year. So minimum 15% growth is coming from the volume growth, but actually it is more than that due to additional businesses of the new models which we are getting. So our share of business overall is increasing from different products with different OEMs. But at least 15% is coming from there. As far as raw material price increase is concerned, I don't see there was an abnormal or very high increase as far as RMC is concerned, but still assuming that 4 to 5% increase is there, which we also pass on to the OEMs, we can safely presume 3 to 4% coming from there. So 15 plus and 3%, 17, 18%, and the rest of the turnover comes from the new products and capacities added for the existing products, and in which I will again mention the contribution is coming from alloy wheels, die casting parts, blow molding parts, filters, etc., etc.
Sure, sir. That's nice to hear. Second question is, after the much awaited this rejig in the stakes from promoter-owned entities and small JVs which we have done. So now, with bulk of those things getting done, what is the plan for inorganic growth down the line, and what would be the size overall you have planned?
Yes, in the beginning of this year, we are now focusing on inorganic growth also. And for that, there is a special team being formed that to look for inorganic growth. And any good opportunity coming our way in any of the existing components or products, plus new generation products, we are interested in and we are looking at. As of now, anything which is at an advanced stage, that's not the case. So we are at a very, very early stage. As far as size is concerned, we look at, there's no limit as such, but we would be more guided by the nature of the product, territory, geography is coming along with technology. So what we will look at is technology and the markets. So in case we get technology or markets or both, we would be keen to go ahead with that opportunity.
That's good. And last question, any update on battery business as you are looking out for a partner? And last time you said we are very close to getting it. So any update on that?
Now we are closer. We wanted to close it before March, but yes, we are at a very final stage. And I'm quite hopeful that next time when we meet, by that time we will share it.
That's great. That's all from my side.
Yeah.
Thanks.
Thank you. We take the next question from the line of Ronak Sarda from Axis Capital. Please go ahead.
Hi, sir. Congrats on a great set of numbers. So a couple of questions. One on alloy wheels. If you can just highlight your expansion plans here.
On the alloy wheel side, we are already 120,000 wheels at Bawal. We have 75,000 wheels under JV company called Minda, which is operational. Now 60,000 wheels at Gujarat has achieved SOP. So that brings us up to 250,000 wheels approximately per month. And there is an expansion plan of another 60,000 in Gujarat, which will come up eventually after we achieve the ramp up in the first 60,000. So 18-19 or 19-20, that should be done first half.
Any expansion in Bawal, the 120K? Or that's...
There could be a possibility of another 60K there.
Yes, there is an opportunity. We are evaluating it, and nothing has been freezed. But there is an opportunity for further expansion at Bawal. But so far we were more focusing on Gujarat, which has become operational now. So maybe another 2-3 months we would like to see the performance and then decide about expansion in Bawal.
Sure, sir. And sir, if you can just help us understand the share of business, on rear parking sensor and airbags. We are pretty close to the mandatory application now. So there would be, certain orders which are freezed. And so if you can just help us understand how big these two products can become for Minda Industries.
In TT DAPS, currently there's a mix of imports as well as local manufacturing. And our share of business for new cars, new platforms which are being rolled out is around 70% for Maruti.
Sorry, no. So for Maruti, you mean to say the entire 2 million, let's say 2 million production of theirs will be 70%?
Currently, the application will happen only after July 2019.
Right.
Yeah. So once that happens, we will contribute at least. Currently, we are doing 70%, and we will want to maintain that share.
Okay. I'm still confused. I mean, how do you take 70% of what base?
Okay, Ronak, I tell you, as far as our path is concerned, still it is early stage. Of course, we have got the first mover advantage, but we know that a lot of other companies are also looking at it. Okay. So that what Trip was telling was that 70% of the new business we target to get from Maruti Suzuki. So actually it could be slightly more or slightly less. That on time will only tell. And similarly in airbags also. Airbags as of now we are mainly supplying to Maruti Suzuki and Toyota, of course, volumes, and 26% of the total market share we have got. There also we have increased capacity. In last 2 years at Bawal new plant was set up, and now in Gujarat. So there also there is a good scope for increasing the share of business also.
Sure, sir. And sir, other than Maruti as well,
26-27% of the market share, which in any case we enjoy as of now.
Right. Right, sir. But on rear parking sensor, any update ex Maruti, because it's still 50% of the industry Maruti?
I'll come back to you with more the business orders.
We are in touch with others also, some of the others. But as of now, our first focus is Maruti Suzuki.
Sure, sir. Perfect, sir. And sir, CAPEX plan overall, I mean, you have given breakup for different units, but overall CAPEX, like the way you used to guide for next 2 years or maybe annual CAPEX if you have the number ready for FY19.
The maintenance CAPEX, which will be around 200, plus the capacity expansion or the acquisition that we announced for PG Minda, which is another 130, so that could be between 350 to 400 overall, including the consolidation.
Okay, 400 including everything, consolidation, maintenance and good CAPEX. Sure, sir. Thanks and all the best.
Thank you. We take the next question from the line of Bharat Gyani from Sharekhan. Please go ahead.
Good evening, sir. Thanks for the opportunity and congrats for a good set of numbers. I have two questions. One is the consolidation exercise which you had planned. So is that successfully completed? I mean, what I'm trying to understand is any other group company left out for consolidation into the financials or majority of it is already done?
95% already done. Two main companies, which is one is PG Minda, for which necessary resolutions, approvals have been obtained. We have to just implement it, but the impact of that will come from Q1 or Q2 of the 18-19. Another company is Qtr4 Minda, which is necessary resolutions, etc. need to be passed. So Qtr4 Minda is the second company, which we hope to do all necessary formalities by this calendar year. So basically, as of now, Qtr4 Minda is the one which is left out, which we hope to bring in by December 18.
Okay. So like for FY19 there would not be very much left for consolidation. Okay. And second question is, sir, if you can just guide it for the tax rates going forward, because they have been consistently in the range of about 25-26%. So will you be in the full tax rate, or is this kind of tax rates sustainable for consolidated basis for FY19? So any color on that would be really helpful.
I think up to 20, we would be able to maintain the rate, and then it depends what kind of situation is there as far as tax laws are concerned. Certain incentives are available to the industry overall, everybody as of now, which we are also availing. And most of the new companies' investments are at 25% rate now. Earlier one, depending upon the size, at 33, 32%. But after 20, really it will depend what is the tax laws applicable or tax rates applicable at that point of time. So
R&D deduction is also will not be there after 1st April 2020.
Okay. Thanks, sir. That's all from my side. All the best.
Thank you.
Thank you. I would like to remind all the participants, please limit your question to 2 per participant. The next question is from the line of Naveen Kumar Dubey from Nanoria Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, what kind of revenue growth are we targeting in FY19 and 20?
I have been mentioning earlier also, I tell you on a very safe side, whatever is the sector growth, which of course we can track month on month. So I see double the rate of sector growth should be our top line growth. And this we are able to achieve in last 3 years, 2 years and 1 year. And similar growth I expect in coming 1 or 2 years at least. I will repeat 2 times of the sector growth. So last year, means 17-18, overall sector growth was 15%. Our top line has grown by 32%.
Yeah, that's great. Sir, another question is on the inventory side. We see the inventory has gone up to 418 crore in FY18. Is there any particular reason behind that?
Partly it is because of the consolidation of four-wheeler switch, which is into Minda Private Limited. So Q4 includes the financials of Minda. So that balance sheet consolidation is there in Q4.
Q4 has been slightly bigger in terms of sales as well compared to the previous 3 quarters.
Yeah.
So that is why you see a slightly higher.
But your observation is correct. In Q4, net current asset has gone up.
Yes, sir. And sir, one more question on the debt equity. Do we see this to stay at the same level, or is it going to taper down?
Taper down would be difficult. I think already we are at a consolidated level 0.6, 0.5. So 0.5 debt against 1 equity. So, but we also don't see any substantial increase also in debt equity. Meaning thereby we don't foresee any big increase in the debt as of now.
Okay. Thank you, sir. That's all from my side.
Thank you.
Thank you. We take the next question from the line of Kartik Mehta from IDFC Mutual Fund. Please go ahead.
Hello, Sudhirji. Hello, Kumarji. Thanks a lot for the opportunity.
Hello, Kartik.
Congratulations for the great set of numbers, sir. How are you, sir?
Fine, thanks. How are you?
I'm fine, sir. Sir, just 2-3 qualitative aspects I wanted to touch. One is that I'm happy to know that you are saying that the Q4 margin of 12.4% is going to be sustainable on full year basis next year, which would be still 50 bits higher than the reported number. So there the point is that segment reported under others, we have seen the margin erosion compared to the beginning of the year momentum. So is it that we are going to take the price hike or we have just taken the price hike in Q1 and it would reverse back, or these other segment margins are probably going to remain at the same level what is there in Q4?
Okay. I mean, there will not be any price reversion, etc. But what we expect is that the continuous productivity improvement which is going on across the board in all the plants will also contribute positively to the further margin improvement in the coming year. And because of that, we would be able to maintain 12.5% or 12.4% EBITDA level as a Minda Industries as a whole, consolidated level.
Yeah.
So it's not that, Yes, please.
But particularly in the other segment, we have seen some sort of a margin pressure in Q4. So what is your thought process on that, which involves your alloy wheel? So, and recently we have seen a phenomenal rise in the aluminum prices. So the other segment margins are going to remain at the reported level in Q4, or there will be some improvement with scale benefit and also some price advantage you might have taken?
No, first I tell you, as you know also, we are into various segments, all segments, two-wheeler, three-wheeler, four-wheeler, five-wheeler. Then our products range is very wide, and all these products are at a different level of evolution or maturity. And what happens as a particular product gets matured, then there is a limitation to also increase or sustain margins. But what we do that by the time any new product or any existing product is getting matured, we introduce other products into the system, and then they take over and grow. So, and 12.5% is at the end of the day weighted average of all the components. So some improve, some don't improve, and some even lag behind. So overall what we say is that 12.5% we would be in a position to maintain. Within that there could be some churning. The components or the products which are at a low level, lighting is also one of them, can improve, and some products which are already touched the peak may slightly go down. There is a possibility. Of course, we would like to delay that process, resist that process, but practically it can happen. But overall, we would be in a position to maintain what we are targeting.
And I think if you look at the others, we are almost at 16% vis-a-vis a group average of 12% this year in terms of EBITDA.
Well, sir, we've lost the line for the current participant. We will take the next question. It's from the line of Anirudh Singhi from IDBI Mutual Fund. Please go ahead.
Hi, good afternoon. I just want some clarity on TG Minda. So, 481 crores, how much would be from airbags?
Approximately 70%.
Okay, and this third plant in Gujarat, how much would that add in revenue?
Additional 250 to start with by 1920.
Okay, and what would be the margins that you make in airbags?
Around same group average number, 12 to 13%.
Okay, alright, thanks, that's all.
Thank you. We take the next question from the line of Jayashree Ram from Karbi Stock. Please go ahead.
Thank you for taking my follow-up question. Just a small observation. In terms of lighting, we were supplying to Bajaj Auto and TVS Motors at about 16% and 13% coming from them. But in this, the presentation you've given, you've not reported any substantial revenues from those two OEMs.
We have done two-wheeler and four-wheeler combined, no? Bajaj, the bigger volumes have gone to Bajaj as well. TVS is also there.
Okay, so they're all okay.
Yeah.
That's there in others?
Yeah, it's there in others. Yeah.
Okay. So just wanted to know because you're reporting numbers which you supply.
Just report top 3-4. That's the reason it may not have been there.
Okay. All right. And what is your average cost of borrowing?
At the standalone entity, this could be in the range of around 8 to 8.5% in the Indian rupee. And outside the standalone at the sub level, it could be between 8.5 to 9%. 8.5
to 9. And in you have reported alloy wheels in die casting at about 710 crores. How much would die casting be out of that?
274.
74. All right. Thank you so much.
Thank you. We take the next question from the line of Kartik Mehta from IDFC Mutual Fund. Please go ahead.
Hey, hi sir. I just got disconnected, so I couldn't hear what you were saying. So, sir, my question was on the margins.
Yes.
And just wanted to highlight one thing that in the switches segment, we have seen a 12% margin in this year. And this is despite of the fact that we have only seen a 1 quarter impact of Minda, which is supposed to be high margin business. Mm-hmm. So, in the next year we see the substantial improvement in the margin in the switches. This is one aspect.
Yes,
and another thing is that...
Yes. Please.
Yeah. Another thing about Minda Industries, which is very good thing, is that while, there is a concern in the sector that with the input costs going up, there will be difficulty in the passing to the OEMs. But given we have multiple products, multiple segments, and also few of the businesses are in a threshold level and will have a positive operating leverage, that's the advantage what we probably carry. And that's why probably we are pretty confident of sustaining the margin or rather improving the margin by 50 bips. Is this a fair statement?
Yes, Karthik, this is very fair, and this is what I was explaining. You got disconnected. That overall basis we would be able to maintain because of the new products coming and all those things. And operating leverage, even financial leverage advantage will come to us. Now, as far as switch margins are concerned, yes, it will improve once we see the full year impact of four-wheeler switch. But I think 1.5% improvement overall in switch margin should be there due to consolidation.
But revenue-wise, like Sir said, two-wheeler, if you look at this full year number also, two-wheeler comprises 13 out of 1500 number. And so the weight of two-wheeler will continue to be almost 2 times the sale that we do out of Minda.
Right. And on a cash flow front, that we have been generating operating cash flow. But when we look at the free cash flow, because of the higher capex, it is still negative. Or hopefully next year we would be slightly turning around in terms of free cash flow on the positive side. And thereafter in FY20 we would have a substantial improvement in the free cash flow. Is it the fair statement?
Yes, I think this is a fair expectation, and particularly in this year 18-19, we don't see any high capex, because substantial capex has already been done and finished in March 18 or maybe something in April. These plants in Gujarat are now operational. Having said that, as I have been sharing earlier also, we are very optimistic about the auto sector. We are looking at that lot of opportunities are coming and will come. Gujarat is becoming now main auto hub. There, of course, already investment has been made. Any good opportunity coming our way, we would like to avail it, but we will evaluate it on merit. And we are also not in a hurry to make investment. In any case, our plate is also full. We need to first harness the investment already made in last 2-3 years.
Yeah. Fair point, sir. Thanks a lot and best wishes.
Thank you, Karthik. Thank you.
Thank you. We take the next question from the line of Harshit KS, individual investor. Please go ahead.
Hello. Good afternoon, sir. So you're saying you'll be giving a double-digit industry growth in the coming year. So can we expect the top line to be around 5,800 crores this year?
We don't give guidance on the top line, but you have to tell us how much the industry will grow.
But anyway, in case we do the double rate growth, then whatever number is coming, that's our target. We hope to deliver. We are working to deliver.
Fine. Thank you very much, sir.
Thank you. Well, ladies and gentlemen, that seemed to be the last question. I would now like to hand the floor over to Mr. Sudhir Jain for his closing comments. Over to you, sir.
Thank you all. Thank you very much. Interesting questions. And with all of your support and guidance, we are trying to do better every time and hope to meet your expectations. With this, I would, for any other query, etc., kindly get in touch with SGA, our investment relation advisor. You can directly contact us also. So once again, thank you very much.